where to download your capital gain statement? Well, look no further. In today's video, I will tell you what capital gains are, how they are taxed, and where to download your capital gain statement. Hello and welcome. I am Prarthana from Clear, which is India's leading financial services platform. Well, as a tax-paying investor, it is crucial to understand capital gains. If not, unpleasant surprises await you when you have to pay tax on them. Capital gains are the profits you realize on selling a capital asset that you hold. Some of the examples of capital assets are equity shares, housing property, a piece of land, mutual fund units, physical gold, and gold bonds. When the price of a capital asset appreciates over time, it provides you capital gains. However, you will realize capital gains only when you sell that capital asset. In general, capital gains are defined as the difference between the sale price and the acquisition cost. For example, if you bought a capital asset for say Rs 500 and you sold it at Rs 1500, your capital gain would be Rs 1000. However, the income tax laws allow investors of some capital assets to adjust their capital gains by factoring inflation and costs incurred for the purpose of transfer, improvement, and so on. This factoring of inflation in cost is known as indexed cost of acquisition or indexed cost of improvement. Capital gains are taxable under the provisions of the Income Tax Act 1961. However, they are taxed differently compared to your income from employment or, of course, business. Two factors dictate how the capital gains are taxed, and they are firstly holding period and secondly type of capital asset. Now, what is holding period? The holding period is the amount of time that an investor holds their capital asset. It is also the duration between your purchase and sale transactions. Your holding of capital assets are classified into short-term and long-term depending on the holding period. The definition of the short-term and long-term holding varies across capital assets, well, the assets classes. So does the rate of taxation.
The following table shows the definition of the short-term and long-term holding periods of various asset classes. If you hold equity shares and equity-oriented funds for longer than 1 year, your holding is termed as long-term. If not, it is short-term. If you hold units of debt funds for shorter than 3 years, it is considered short-term, and holding them for longer than 3 years makes it long-term. Holding immovable properties such as housing property for shorter than 2 years is considered short-term, and if you hold it for longer than 2 years, it becomes long-term. Holding movable assets such as gold for shorter than 3 years is termed as short-term, and longer than 3 years makes it long-term. The following table shows the short-term capital gains tax rates of asset classes. The short-term capital gains tax on equity shares and equity mutual funds is levied at 15% irrespective of your income tax slab rate. The short-term capital gains earned on your investment made in debt funds, movable and immovable properties are added to your overall income and taxed at your income tax slab rate. The following table shows the short-term capital tax rates of asset classes. Long-term capital gains of up to Rs 1 lakh a year offered by equity shares and equity mutual funds are tax exempt. Any gains over this limit attract a tax of 10%. Long-term capital gains provided by debt funds, movable and immovable properties are taxed at 20% after indexation. Applicable cess and surcharge are imposed on both short-term and long-term capital gains.
Now you might be wondering what indexation is. Well, indexation helps you to reduce your overall tax liability after adjusting for inflation. This allows you to realize higher capital gains. Indexation is allowed on long-term capital gains for select investments. This is done through the price index, which adjusts for inflation for both purchase and sale prices. It is very important to know your capital gains to determine your tax liability correctly. If you are a mutual fund investor who holds units in non-demat form, you can get your consolidated capital gains statement with registered RTAs such as CAMS. You can download your capital gains statement on the CAMS website by following these steps. Firstly, log on to the CAMS online portal and navigate to find the Investor Services tabs on the top menu. Secondly, then click on the Mailback Services tab on the left side of the menu. Next, select Consolidated Account Statement. Once this is done, you need to provide a valid email address and of course choose a password. The password should not be your email address password. CAMS will only use this password to encrypt the file sent to you. After this, you will receive the account statements to your registered email address in say an hour. To open and view the file, you need to provide the password which you had previously created. Moreover, you can also ask for a single folio statement instead of a CAS. You can do so by selecting the single folio account statement from the available list. Well, I hope you now have a fair understanding of what capital gains are, how they are taxed, and how to download capital gains statement from the CAMS portal. Do like, comment, and share this video if you find it useful. Do not forget to subscribe to our channel so that you get a notification every time when we upload a new video. Thank you so much for watching. Take care.